Stop scrolling right now because something massive is happening to your bank account in 2026, and nobody's talking about it. If you use direct deposit, autopay, or care about protecting your money from scams, this could literally save you thousands. I'm Luna, and I'm breaking down exactly what's changing and how you can protect yourself before it's too late. Here's what banks don't want you to know. A new rule goes live in March 2026 that could freeze your paycheck, delay your bills, or flag your own money as fraud. And the scariest part, you might do nothing wrong and still lose access to your money. Let me be direct with you. The banking system is getting completely overhauled this year, and it affects everything: how you get paid, how your automatic payments work, and how your bank decides whether to trust you. So what's actually changing? Starting March 2026, banks are implementing brand new fraud monitoring through NACHA, the organization that controls America's entire payment system. Until now, banks only watched money leaving your account. But this changes everything. Now they're monitoring both money coming in and going out. Why? Because fraud has gotten insanely sophisticated. Criminals are now making fake deposits that they reverse later, or routing stolen money through innocent people's accounts. By watching both sides, banks catch these schemes faster. But here's the real impact for you. Your bank's AI systems might flag legitimate transactions as suspicious. Get a bonus payment on Wednesday instead of your usual Friday paycheck. Your bank might hold it while they verify it's real. Set up a new subscription payment. It could be paused. Yes, this protects you from actual fraud, but it also means you need to check your account way more often than before. Next major change: transaction descriptions are being standardized. Remember staring at your bank statement trying to decode what XYZ_CP_12,345 actually means? Gone. Starting March 2026, every transaction gets a clear human-readable label. Your paycheck shows as payroll. Your Amazon purchase shows as purchase. Your utility bill shows as bill payment. This isn't just convenient for your budget. It's massive for fraud detection. You instantly see when something doesn't belong. Spot a weird charge? Report it immediately, instead of wasting hours figuring out what some cryptic code means. Now, if you do catch fraud, the rules are changing dramatically in your favor. Under the old system, you'd see a pending fraudulent charge and call your bank. They'd basically say, "Sorry, we can't stop it until it goes through." You'd watch your money disappear, then spend weeks fighting to get it back. Not anymore. The new rules allow banks to file what's called a written statement of unauthorized debit the second they see a pending transaction, even before the money leaves your account. This means you can stop fraud before it happens, not after. For people living paycheck to paycheck, even one stolen charge can mean bounced bills and overdraft fees. This change could save you hundreds. Here's something else critical: social engineering scams. You know these. Someone calls claiming to be from the IRS, saying you owe back taxes. Someone pretends to be your grandchild in jail needing bail money. A scammer claiming your computer has viruses. The old rules basically said you authorized it even if you were lied to, so you're out of luck. That's changing. The 2026 rules create specific legal protection for payments made under false pretenses. Banks now have to take these seriously and actually work to recover your money. You're not guaranteed to get it back, but banks have to try. This recognizes that victims of these psychological manipulation tactics deserve protection. Let's talk about government benefits. The U.S. Treasury is basically eliminating paper checks. If you get Social Security, veterans benefits, or tax refunds by check, that's ending. By 2026, you're switching to direct deposit or a prepaid debit card. The security reason makes sense. Mail theft is exploding. Criminals steal checks and wash them. But this means you need to be actively checking your account to verify deposits arrived. The set it and forget it check in the mailbox approach doesn't work anymore. You're responsible for confirming your money arrived safely. Another game changer: instant payments. The Federal Reserve rolled out FedNow, which moves money between banks instantly, 24/7, including holidays and weekends. Want to send your family emergency money at 2 a.m. on Thanksgiving? Done instantly. Want to get paid faster? It happens in seconds instead of days. The problem? Fraud also happens instantly. If someone gets your account access, they drain it in minutes, not days. This is exactly why all these new monitoring rules exist. The system is faster, so security has to be faster too. That means you need to be paranoid about protection. Use a strong password. Enable two-factor authentication. Be skeptical of anyone asking for account details, even if they claim to be from your bank or government. Now, overdraft fees. Congress blocked a federal rule that would have capped these at $5. Massive win for banks, disaster for consumers. But California implemented its own version, capping overdraft fees at $14 for state-chartered credit unions. The major national banks? They're not capped. Here's the solution. Check your bank's overdraft policy. Better yet, opt out of overdraft protection entirely. Transactions just get declined instead of approved with massive fees. It's embarrassing in the moment, but it saves you money. The bigger picture is regulatory change. The current administration is pushing what they call innovation-friendly banking. Translation: easier to start new types of banks, more openness to cryptocurrency companies, less regulation overall. This is a complete 180 from the previous administration's strict oversight approach. Is this good or bad? Depends on your perspective. Supporters say more competition and innovation. Critics worry about risky behavior and less consumer protection. The truth is in the middle, and we won't know the real impact for years. One specific area to watch: debanking. Banks have been refusing service to certain customers. Cryptocurrency companies, cannabis businesses, firearm retailers, because of regulatory complexity. The new administration is pushing back, saying legal businesses deserve banking access regardless of industry. For most of you, this doesn't directly matter, but it shows the broader shift toward a less restrictive system. Here's something that actually affects you: open banking. Starting April 2026, the largest banks must let you easily transfer your financial information to other providers. Want to switch banks? Want to use a third-party budgeting app? It has to be easy and secure. Smaller banks have until 2030. This is huge. Right now, the hassle of moving automatic payments and updating direct deposits keeps people trapped with banks they hate. Open banking makes switching painless. Shop around. You might find better rates or better service elsewhere. The privacy protections also matter. Companies can't use your data for unauthorized purposes, and banks can't force you to give passwords to third parties anymore. Last thing, interest rates. The Federal Reserve has been cutting rates, and they'll continue throughout 2026. Your high-yield savings account earning 5%? It's now closer to 4% or less. Conversely, if you have variable rate loans like credit cards, you might see slight decreases too, though probably not enough to change your payments much. Here's what this all means for you, in practical terms. Your bank is watching your account more closely. This is mostly good for fraud protection, but verify quickly if transactions get flagged. Read your bank statements now. Clear descriptions make spotting fraud instant. Check unauthorized payments early. You can stop them before they process. If you get government benefits, set up direct deposit or your prepaid card right now. Paper checks are done. Look at your overdraft fees. Opt out of overdraft protection if you can. Shop around with open banking. You have more freedom to switch than ever before. Watch your interest rates. They're changing throughout 2026. The real truth: banking is becoming more digital, more automated, more complex, but also potentially more secure and consumer-friendly if these rules work the way they're supposed to. The key is staying informed. Check your accounts regularly. Protect your information carefully. Don't hesitate to call your bank if something seems wrong. They're required to explain these changes to you. Most representatives can walk you through what's happening and how it affects you. Remember, some of this might feel inconvenient at first, but most of it is designed to make the banking system safer and more transparent for people like you. Your money and your financial security depend on you understanding this. These banking rule changes are real. They're happening now. They're going to affect how you interact with your bank throughout 2026 and beyond. So stay informed, stay prepared, and most importantly, stay aware that your money is worth protecting. If you found this helpful, subscribe to US Updates by Luna for real explanations about money, banking, and financial changes without the confusing jargon. Thank you for watching.